Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Muhammad Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I'm a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the CPI M over M related to Australia, and I'm going to discuss AUD USD currency pair. The next one is the retail sales month over month United Kingdom, and I'm going to focus on GBP USD currency pair. So these are the previous week fundamental analysis. Let's start. Okay, the first one is the CPI M over M month over month related to Australia. So what is CPI month over month? CPI, also known as Consumer Price Index, M over M stands for month over month, measures the change in the price of goods and services in Australia compared with the previous month. It is a key inflation indicator closely watched by the Reserve Bank of Australia when making interest rate decisions. A higher than expected CPI reading signals rising inflation, which may lead to tighter monetary policy and can support the AUD, often pushing AUD USD higher. On the other hand, a lower reading suggests weaker inflation, which may weaken the AUD and drive AUD USD lower. Now, let me discuss the event details. On March 25th, 2026, at 12:30 a.m. UTC time, we got the actual news, and the news actually came out. Okay. Now, the previous number was 0.4%, forecast 0.1%, actual number we got is 0.0%. Now, let me discuss market context and financial news release outcome. Australia's CPI M over M came in at 0%, below both the previous reading of 0.4% and the forecast of 0.1%. This showed that inflation slowed more than expected, indicating weaker price growth across the economy. Because inflation came in softer than forecast, the market reduced expectations of tighter policy from the Reserve Bank of Australia. This created pressure on the Australian dollar and pushed the AUD USD lower. Now, let me discuss about market reaction. Well, after the news announcement, AUD USD moved downward as forex traders reacted to the weaker inflation data. Let me show you the price chart of AUD USD currency pair. So over here we got the news announcement and AUD USD kind of dropped lower over here. The lower than expected reading suggested reduced urgency for future policy tightening, which lowered short term demand for the Australian dollar. The move lower also reflected immediate repositioning by forex traders after the inflation surprise. Now, the key drivers behind the move, the actual CPI came below forecast at 0.0%. Inflation slowed sharply from the previous 0.4% number and reduced expectations of near term tightening by the Reserve Bank of Australia. Selling pressure increased in AUD/USD currency pair after the news release. The downward move was mainly driven by softer inflation expectations and weaker short-term AUD sentiment. The technical and sentiment considerations. The AUD/USD showed bearish movement after the news release, as the weaker inflation result spotted sellers. Short-term sentiment favored US dollar strength against the Australian dollar. Further movement in price action depends on broader US dollar direction, risk sentiment, and upcoming financial economic data from both Australia and the United States. Now, let me discuss about the trading outlook. The bias turned bearish for AUD/USD currency pair after the CPI release. Short-term pressure remains on the Australian dollar after the initial move. The overall analysis and key takeaway is Australia's CPI month over month slowed to 0.0%, missing the 0.1% forecast. The forecast was 0.1% and falling below the previous 0.4% number. The weaker inflation result increased pressure on the Australian dollar and pushed the AUD/USD lower after the news announcement. The final key takeaway is the previous number was 0.4%. Actual number we got is 0.0%, and the forecast was 0.1%. So lower than the expected inflation weakened the AUD and caused the AUD/USD currency pair to move down after the financial news release. Next one is the retail sales month over month related to United Kingdom, and we're going to discuss the GBPUSD currency pair. Now, what is retail sales M over M in United Kingdom? Well, the retail sales month over month measures the monthly change in the total value of sales at the retail level in the United Kingdom. It is a key indicator of consumer spending, which makes up a large part of economic activity. Stronger than expected retail sales suggest higher consumer confidence and economic growth, which can support the GBP and push the GBP/USD higher. On the other hand, weaker data signals reduced spending and slower economic activity, which may weaken the GBP and drive GBP/USD lower. Now, let me discuss the even details. The retail sales number we got on March 27th at 7 a.m. UTC time. The previous number was 2%, forecast was minus 0.6%. The actual number we got is minus 0.4%. And the currency pair we're going to focus is the pound versus United States dollar currency pair. The official February retail sales figure showed a 0.4% monthly decline, slightly better than the expected 0.6% drop. Okay, reported by the economists, but still a clear slowdown from January's strong gain. Now, the UK retail sales fell to 0.0%, 0.4%. That's a negative number, minus 0.4%, down sharply from the previous 2.0%. Okay, so the 2.0%, that was the previous reading. Although the result was slightly better than the forecast of minus 0.6%, it still confirmed that consumer spending slowed after the strong previous month. The weaker monthly reading signaled softer domestic demand, and GBPUSD moved lower after the announcement as traders focused on the decline in consumer activity. Now, let me show you the price chart of GBPUSD currency pair. Here's the price chart of pound dollar. You can see overall GBPUSD just keep falling down. The key drivers behind the move is the actual retail sales came at minus 0.4%. Consumer spending slowed sharply from the previous 2% number. The results still reflected weaker monthly demand. GBPUSD selling increased after the release. The move lower in GBPUSD was mainly driven by concerns about slowing consumer activity in the United Kingdom. Now, let me discuss technical and sentiment considerations. GBPUSD showed bearish movement after the financial news release as sellers responded to weaker spending data in the UK. Short-term sentiment favored US dollar strength against the British pound. Further movement depends on broader US dollar direction, market risk sentiment, and upcoming United Kingdom economic news releases. The trading outlook, the buyers turned bearish for GBPUSD after the retail sales release. Short-term pressure remains on British pound. Further downside depends on continued US dollar strength. So watch out for pullbacks if forex traders lock in short-term profits. Overall analysis and key takeaway is UK retail sales declined to minus 0.4%, below the previous reading of 2.0%, confirming a slowdown in consumer spending. Although the result was slightly better than forecast, the market focused on weaker monthly demand, which pushed the GBPUSD lower after the news release. The final key takeaway is the previous number was 2.0%, forecast was minus 0.6%, the actual number we got is minus 0.4%. Retail sales weakened in the United Kingdom and GBPUSD moved lower after the release as forex traders reacted to slower consumer spending. Now, let us take a look at previous week global market trends. I'm going to talk about the Euro USD and US dollar Swiss franc currency pairs. So let me go over to a price chart. The first one is the Euro USD. Euro USD currency pair is trying to move sideways, and the way I see it, it looks quite possible that market might drop first and then wait for a bullish pullback, and then it's probably going to resume the downtrend. The next one is the US dollar Swiss franc. My forecast was bullish in Swiss franc, and the way I see US dollar Swiss franc currency pair overall is 180.40 price level over here. So the forecast is bullish in US dollar Swiss franc currency pair overall. Now, let me talk about current week's macroeconomic events and data releases. I will be covering the key developments in forex market with a focus on fundamental analysis. The first one is the unemployment rate in Europe, and we're going to discuss the euro dollar currency pair. The next one is the CPI month over month related to Switzerland, and we're going to focus on US dollar Swiss franc currency pair. So let's start with the first one, the unemployment rate in Europe. So today is March 31st. So in few days time, we're going to get this financial news announcement related to unemployment rate in Europe. The date and time is April 1st at 9 a.m. UTC time. Now let me discuss about it. So what is unemployment rate in Europe? The unemployment rate measures the percentage of the labor force in the European Union actively seeking work but unable to find employment. It is a key economic indicator because rising unemployment often reflects slower business activity and weaker consumer spending. A lower than expected unemployment rate usually supports the euro by signaling stronger economic conditions, which can push the euro USD higher. Conversely, a higher unemployment reading may weaken the euro, raising concerns about slower growth and creating downward pressure on the euro dollar currency pair. Now, let me discuss the financial event details. The previous reading was 6.1%, forecast is 6.1%, actual data not yet released. The official release is going to be happen. It's not yet released. Okay. Regarding the euro dollar currency pair, the way I see the price action is most likely going to react negatively after the release, because if you take a look at the price chart of euro dollar currency pair, the trend is still down, and the expectation of getting a 6.1% reading suggests that job creation lagged, it's going nowhere, and it's raising concerns about the pace of economic recovery and reducing short-term optimism for the euro. So the euro dollar is already going down, and the way I see it's probably going to drop even further. The technical and sentiment so I expect that kind of a volatility in price action right around the news release time, and forex traders might adjust positions based on the higher unemployment data. So right now, I would say the short-term sentiment favor US dollar strength, reflecting risk-averse positioning. Uh, so the bias is basically down. It's a bearish bias for the euro dollar currency pair. The unemployment rate, the forecast is also 6.1%. The previous one number was also 6.1%. So not much change is coming. We might get a surprise when the actual news comes out. So any deviation from the forecast level of 6.1%, it could move the market up or down in euro dollar currency pair. So the overall analysis and key takeaway is the European unemployment rate that we're expecting is around 6.1%. And the way I see, if we get a number that comes greater than this number, then obviously euro dollar is going to drop even further. And if we get a less number, like 6% or less than 6% number, then that would be good for the euro USD, and we might get a bullish price action in euro dollar currency pair. Next one is the CPI, month over month related to Switzerland. So what is CPI month over month in Switzerland? CPI, also known as Consumer Price Index, month over month measures the monthly change in price of goods and services in Switzerland compared with the previous month. It is a key inflation indicator closely monitored by the Swiss National Bank when assessing monetary policy. A higher than expected CPI reading signals rising inflation, which may strengthen the Swiss franc and push the USD Swiss franc lower. Conversely, a lower reading suggests softer inflation in Switzerland, which may weaken the Swiss franc and drive the USD Swiss franc higher. Now, the previous number was 0.6%. The forecast is 0.5%. Actual data not yet released. Well, the actual data is actually, I would say, it's pending, but you will get that financial news announcement on April 2nd at 6:30 a.m. UTC time. Now, let me talk about market context and pre-release expectations. The forecast of 0.5% suggests a slowdown in Swiss inflation compared with the previous 0.6% readings. So Forex traders will closely monitor whether the actual CPI confirms this trend or surprises the Forex market. A lower than expected reading could reduce expectations of tighter monetary policy from the Swiss National Bank, potentially weakening the Swiss franc. Conversely, a higher than expected reading could support the Swiss franc and push US dollar Swiss franc lower. Market participants are also watching broader US dollar strength and global risk sentiment, which could amplify or offset the initial move after the news release. Now, why we could get a move in US dollar Swiss franc? Well, as far as the trend is concerned, over here, if you take a look at the price chart of US dollar Swiss franc, it's actually turning bullish over here, and market is probably going to hit 0.8040 level. So the CPI, I would say, when we get an actual number regarding the CPI, we'll see how the market is going to react. But I would say if this 0.5% number, it shows a slow economic activity. So the forecast of 0.5%, it's not good. The previous number was 0.56%. Okay. So the final key to takeaway is the previous reading was 0.6%, forecast is 0.5%, the actual data not yet released. The CPI release is a key driver of Swiss franc movement, and the market reaction will depend on whether inflation comes above or below the expectations. Now, let us take a look at current week Forex market trends. And I'm going to discuss the Euro USD, AUD USD, US dollar Swiss franc, and spot gold. So let's take a look at euro dollar. As far as the daily time frame is concerned, it's a downtrend going on in euro USD. If we take a look at 4-hour time frame, this was the area which I was expecting market to break out. So far, price action is going sideways. So it's quite possible that market is going to rise up a little bit and then resume the downtrend, so to speak, in euro dollar currency pair. The next one is the Australian dollar AUD USD currency pair. AUD USD currency pair, this was the weekly bullish breakout, and we can extend this trend line over here. If we take a look at daily time frame, this was a break of a support area, and now it's quite possible that AUD USD is probably going to rise up to test this support, which is probably going to act as a resistance, and then we might get, I would say, further weakness in price action after that. So the way I see AUD USD is probably going to move sideways. Okay, and we might get a bullish move first and then further weakness in price action. Next one is the US dollar Swiss franc. US dollar Swiss franc weekly time frame. It looks kind of bullish. We got this breakout over here. Okay, so the way I see market is probably going to rise up first and then expect some sort of a bearish pullback. So to me, the trend is up in US dollar Swiss franc. If we take a look at daily, same story. Price action is going up. Next one is the spot gold. Okay, spot gold, as far as the weekly chart is concerned, this was the break to the downside. So market is probably going to drop even further. Now we might see some sort of a bullish pullback over here in XAUUSD pair, and then price action is probably going to resume the downtrend. Okay, I will take a few minutes now for questions and comments. And if you have any questions or comments related to today's Forex trading webinar, feel free to type them in the chat box and I will be happy to answer your questions. Yes, the trend looks kind of bearish inside AUD USD currency pair. Okay, the comment, there's a question about the oil price for this week. Yes, the trend is up in oil, most likely. Okay, there's a question regarding the Fibonacci retracement level and how to use it. Well, number one, you need to, first of all, identify the market trend. Look for a clear uptrend or downtrend on your price chart. In an uptrend, the price moves higher, making a series of higher swing highs and higher swing lows. In a downtrend, the price action moves lower, making lower highs and lower lows. And then you can use Fibonacci tool. Usually, if I go to a chart over here, this is what you can do. For example, in this case, we got a nice downtrend over here, and we can draw a fib level or Fibonacci retracement tool and try to wait for the market to test these fib levels like 0.618% or 50% fib levels, and market usually finds support or resistance around these areas. Okay, let me go over to the next question. um, Well, I basically use technical analysis to trade and forecast the market. So I have no idea about the political side. As far as the trend is concerned, we can see that the euro is falling down. So if euro USD is going down, then it means the United States dollar is becoming strong and euro is becoming weak. Okay, now if euro USD just keep going up, then it means the euro is becoming strong and United States dollar is becoming weak. Okay, so let us review what we have learned today. Well, we discussed about the unemployment rate in Europe related to euro USD currency pair and the CPI related to Switzerland. These are the assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, April 7th, 2026 at the same time. That's all from my side for now. Have a nice day and goodbye.